my name is Robert Da Silva. I'm the President and CEO of Alliance Blackstone Valley Federal Credit Union, and today we'll be going over credit scoring and how it affects you in getting a loan and what you can do to improve your credit score. We'll start off today by going over what a credit score is. What is a credit score? A credit score is a 3-digit number that goes over the information from your credit bureau to summarize your credit risk. More specifically, the likelihood of you becoming seriously delinquent on a payment in the next 2 years. The way that credit scores work is the higher the score, the lower the credit risk. And credit scores range from a score of 300 to 850. What makes up a credit score? Well, 35% of the credit score is based on the payment history. Histories from credit cards, store credit cards, installment loans like auto loans and personal loans, mortgages, and finance company loans. Public record and collection accounts like bankruptcies, foreclosures, judgments, and legal suits. Details that are in the payment history are how late were your payments? Were they 30 days, 60 days, or 90 days past due? How recently they occurred? The last 24 months carry the most weight. How many were there? One versus many. Also, how much was owed? A mortgage payment of $2,000 is going to be more significant than a credit card payment of $25. That's 35% of your score. 30% of the score is made up by the amount of debt that you owe. It takes the total amount across all accounts and specific accounts, but the most important part here is the credit utilization. And that's basically your balance on revolving debt like credit cards compared to the credit limit on those cards. And it also takes the remaining balance on any installment loan like an auto loan or a personal loan. 15% of your score is based on credit history, the age of your oldest account, the average age of all accounts, and the age of the specific accounts. 10% of your score is based on new credit, the number of new accounts that you have, how long it's been since you opened a new account, and how often you've made requests to open new accounts in the last 12 months. Those are called inquiries. Just a note on new credit, a lot of people do rate shopping when they're looking for an auto loan or a mortgage. If you do that within a specific time period, those inquiries may not affect your credit score. The other 10% is made up of the credit mix, basically what you have in installment debt versus what you have in revolving debt. That adds up to 100%, and that makes up everything that is in your credit score. Now, how is credit score used? A credit score is used basically to determine not only if you qualify for a loan, but what type of interest rate that you'll receive. Risk-based pricing allows lenders to price loans differently based on your credit score. So that will mean that higher scores will usually get the best rates available. In the long run, a better credit score will help you save money by paying less in interest rate over the life of the loan. So that's another reason why you want to have a very high credit score. How can you influence or improve your credit score? First and foremost, you want to check your credit report to make sure that there are no errors on that report. A lot of times you may see a trade line or something that's there that you've never seen before. There are mistakes, and mistakes can be made. You can make an inquiry to check your credit report and make sure that there are no errors on it. Another way to improve your credit, obviously, pay your bills on time. If you've missed a payment, make sure that you're current and stay current. If you have any collection accounts or judgments, you should pay those off. They won't disappear from your credit report. They will stay on for 7 years, but carrying a zero balance is better than carrying a balance with an amount. Also, you want to keep your balance low on credit cards. You want to have a good mix of revolving debt and installment loans. You can have credit cards, you just want to make sure that you manage them responsibly. And also, don't open a number of new credit cards that you don't need just to get some available credit. That will actually adversely lower your credit score. If you aspire to be a credit score high achiever, which is a person that has a credit score of 760 or above, here are some of the items on their credit profiles that are interesting. 96% of them have never missed a payment. Only 1% has ever had a collection account. None of them have had a public record account like a judgment or a bankruptcy. They have an average credit utilization of 6%, which means that they're carrying a balance of 6% of their credit limit. They have an average of 3 accounts that carry a balance, and they owe less than $3,000 in credit cards. The average age of their accounts is 11 years, the oldest being 25 years. And the most recent new account was opened 2 years ago, and less than 35% of them have applied for new credit in the last year. I thought those were interesting statistics for the high achievers. And if you aspire, again, those are the things you want to aim for. How can you learn about your credit score? You can receive a free copy of your credit score every 12 months from all 3 major credit bureaus, which are Experian, Equifax, and TransUnion. But you cannot receive a free credit score. Remember, that's a report, not a score. You must purchase a credit score. One of the most reputable scoring models is called FICO. Over 90% of the lenders use some type of FICO modeling, and if you want to see what the lenders see, that is the best model to use and to purchase. The other way that you can get a credit score is if you've recently applied for a loan, you can ask the lender what your credit score was. One of the other questions I get a lot, where can I go to learn more about credit scores? Well, you can get your free copy of a credit report from annualcreditreport.com. That website will give you all 3 credit bureaus free of charge. And you can also learn more about credit scoring and purchase your score from myfico.com. Again, please be cautious of other websites that will allow you to purchase a credit score. It may not be the same credit score that a lender will see, since most of them do use the FICO model. I do get a lot of inquiries. Many members ask about improving their credit score and want to know how much their score will go up if they do a specific thing, i.e. paying off a balance on a maxed out credit card. Because no 2 people have the same exact credit profile, it's virtually impossible to determine the distinct effect on a score. However, we do let members know that if their credit report does not contain much history, any one positive step that they make will have a greater impact on their score.